Hi everybody, it's Mark here at Teslary, and Tesla closed red today, but very slightly, and it's not too surprising after its strong day yesterday. The closing price was $259.98, a drop in share price of $1.18 or 0.45%. Now, it was basically flat, and yesterday I said, I don't know how to draw flat. I honestly thought that as we were dropping during the course of the day, we were at this point where on our chart that I drew yesterday, that is this red line, that is kind of a make or break. That if it falls below, I think it would drop until the trend line. And that's really going to be dependent on how the market really reacts to the news. And today was kind of a nothing burger, even in regards to the Fed speakers and not just the economic data. Data came in line, and it doesn't really matter anyways. No one cares about those job numbers. They're always being revised. Anyways, what's really important though is tomorrow's job number, which is going to be non-farm payrolls, comes out in the morning. That could be a real good catalyst to affirm that we're not going to have any more rate hikes. Currently, there's still some contention, and we can look at that real quick. Let's just go to the browser to check out the news, and we'll look at the CME Fed Watch tool here, and looking at the bets for November. Most of the bets are that it's not going to hike, and it's over 75%. Not so clear in December. So the December meeting, it looks like it's like 65 to 30 to 65 to 34% really, that there's going to be a hike. And let's try to identify where the cuts start to happen. And you don't see kind of a vote of confidence for a cut, not really solidifying until, let's see, it looks like May of next year. You're seeing a 1/3 chance of a cut. Going into June, you're seeing roughly over half of the respondents by June of next year will assume the cuts will happen to the Fed funds rate. Possible, but you don't really see that being priced into the market, really, right? Everyone's really concerned about higher for longer, but at the same time, let's balance that story with the idea that if every October and every September and every August, basically these 3 months are just terrible every year, and I said it to you guys before, it's really just trying to sell the average everyday trader or investor a story that the market's going to get really, really bad. And they need to continually convince you that it's going to be bad. But yet it happens literally every year on the dot, on the same time. The same weeks react the same way. The same weakness represent themselves in the same way. It almost works in the same percentages on a constant yearly basis. Look, we talk about it all the time. If you're new to my videos, the drawdowns you see in September to October, it's seasonal for a reason. It's just, those are the historical averages. They're not horoscopes. They're not pattern predictions in a line chart or a candle chart. It's literally just averages, and the average is that people need to make money, and they're going to make money how? They're going to sell everyone on the story. The story is going to be this: the interest rates are going higher. That's just it. Interest rates are going higher forever. Even though most of the respondents, who are Wall Street types of people, are saying by next spring, next summer, we're going to start cutting, but yet the market continues to show weakness. That's really interesting, right? Because it's a whole industry working against you for one reason alone. I say it all the time. It's for performance. They need to perform this year. They're shorting into October, and they're longing out of the bottom. And the thing is, we don't know when the bottom is. We're not going to know when that is. But from after the bottom in October or end of October, then it goes on for about a month and a half for a rally. That's it. That's just it. And who wants to go? In reality, who wants to go? It's like Thanksgiving and Christmas. Do you really want to go on Thanksgiving and Christmas just feeling like crap? No. It's kind of like shorting the market on September 11th. It's not going to happen. It's un-American, right? So look at the economic data that came in today. Jobless claims in line, trade deficit in line. Some of the speakers are a little bit more dovish, but obviously didn't do anything. It maybe helped the market recover to be flat, but it's not too great. But tomorrow, so the expectation is 170 for the non-farm payroll, which is kind of in line with a lot of the analyst estimates for the big banks. Unemployment rate, remember this was a strong bounce. I don't know. Look, I always say it all the time. You always want to miss to the downside or the upside a little bit when it comes to these types of numbers, employment numbers. You kind of want to maybe have a 3.8. You kind of want to have 160,000 jobs made instead of 170. You want to see those kind of misses, but not too much, right? You don't want to cause a shock to the economy. But the reality is you want to see what? We want to see wage pressure come down. We want to see employment rate slightly up. We want to see employment numbers look slightly weak. And we want to see And consumer credit maybe even looking weak, right? Because who's most people's credit cards are maxed out anyways, and who's taking out loans? Nobody. I mean, the loan originations are nothing. There's nothing to be found in there. Before we go back to the charts, let's look at the max pain. Since tomorrow is going to be expiration, here's max pain for the Maxim website for Tesla firstly, and we'll do SPY right after. So we're seeing that as far as open interest goes, we're seeing a put call ratio that's traditionally not this negative. No, I say it all the time as well that Tesla traders are very, very bullish because usually the people who are trading Tesla options, the vast majority of them are just you and me, just like people who love the company, and they're very bullish on the company's prospects. So usually on a weekly basis, you see like the put call ratio and open interest basically being like 0.6, meaning there's so many more calls than there are puts. But now this time around, we have more puts than calls. Maybe a good sign to keep pricing at least not so red, right? I'm not saying it can sustain itself, but looking at this wall of puts, we have a lot around 250, 255. So even if it does drop, how far can it drop? At the end of the day, it really always depends who owns the puts, right? Like I doubt a bunch of retail people are buying puts. So I would say that's the caveat, that retail people are not buying. Like, you know what? I think Tesla went up 6% today. I'm buy a bunch of puts. That's really not how retail works. They're like, my Tesla stock went up. Okay, my Tesla calls went up, so I'm going to buy more calls, right? And that's usually how it operates. But what's more important is the volume on options. The ones, the volume of what's being traded. We're seeing We're seeing a lot of pinning happening here at 260. We close around 260 right now today. You're seeing a lot of. It's no surprising as far as volume goes. All the calls that are coming in, like it's too much. But there is still a good body here of puts, maybe just onto a lower strike level. But maybe the floor is in this area again, like the 255 to 260 area being the floor pricing, and a catalyst can get you below it, sure, and a catalyst can get you above. But as far as if you're letting price action be determined by maximum pain, then you get stuck kind of in this area, anywhere from 250 to 265, maybe, perhaps. Meaning that maybe there isn't a lot of upside unless SEC sues Elon Musk even more, the government sues Elon Musk even more, or we get the Cybertruck release. Now, we have the Cybertruck event for Peterson's Gala coming out on Saturday, I think. So they'll be auctioning off a Cybertruck for their very rich attendees at their gala. I heard from Gregor Truck on Twitter that they're sending a Cybertruck truck, actually a real truck, to SEMA, the auto show. I think that's typically in Vegas, and as well the Electrify Expo in Miami next week. So it's very possible from a mainstream media perspective, we'll be seeing stuff next week. Maybe you have an option, and I'm not saying this is not financial advice. Please ask your financial advisor. But let's say you have a bunch of options expiring tomorrow for Tesla. Let's say it opens up green. I would almost recommend to a family member, hey, maybe we move those out. While these are still green, let's move them out to next Friday or something like that. Because if we're not getting the details now for the Cybertruck launch event, it's almost guaranteed that you're not seeing a Cybertruck launch event until first, second, third week of November. Because remember, everyone has to get their tickets. Everyone has to get their hotel reservations. And we haven't had crash testing done and certified by NHTSA yet. So something to think about. Let's go to SPY for the 6th of October. Let's switch it to the 6th. We're seeing a lot of puts. Similar, not really a lot of puts. I mean, it's very similar to Tesla's ratio, 1.1. But as far as kind of making a floor, maybe there's a lot of interest at 420. Maybe that's going to be the floor. 422 and 423, 424. That looks like a more of a volume play over here in the volume chart. It looks like there's a lot more action there, and it looks like the calls are 425, 426. Yeah, there's a lot of people that like the number 430. Who knows? That's only a percentage. But non-farm payroll is going to be the deal. And let's go back to the chart and kind of look the reality is the markets are really weak. So how long can they stay weak? And my answer to that in other videos, it can stay weak forever, basically, right? We've seen, and then just looking for a single ticker, we can go back to, August, September, October, into December for Tesla. Oversold can stay oversold. Like Tesla people know all about that. People that, play S&P 500 or SPX, they don't know about that. They're all very sure that, when something gets to a certain RSI level, it bounces. But you remember that bounce to relieve RSI doesn't have to say, be forever. And we've seen RSI. Let's go to the S&P 500 on a longer time frame. We've seen the SPY, bottom out RSI wise much sooner than it did before it actually bottomed in price, like right here. So the bottom for RSI was in September of last year, but it fell another 2.47%, right? Intraday to intraday, peak to trough. It fell another like 2.5% over the course of 2 weeks. So, yeah, just letting everybody know, like, it can happen again. But let's go to the daily to get a better accurate reading on RSI. I think that's what we've been doing so far for the S&P 500. And we do that because S&P 500 can also dictate the pricing for Tesla. Right now, it's very, very low. It's not so great. Not so great. But how long can it stay low? I mean, 34? Like, that's crazy. Let's see what RSI was again, just to remind me. I keep forgetting. So the RSI in September, in the September low is over here, actually. It was 26. Oh, so we can go a little bit lower when it comes to RSI if you want to bottom out. Though we've seen a 28 already, and who knows. Let's check out the pattern. What we're seeing here on a 5-minute time frame, looks like a nice little, looks like a nice bull flag. It looks like not necessarily terrible when you're looking at that time frame. I'd love to see it break out of that level, but you can see it really respecting 425. Okay, let's just think about this for a second. If you were to go higher on non-farm payroll, the obvious thing is just simply you can see some gap fills that could be had. And what kind of move would that be from the close, not from the after hours? If you can get like a 0.7% move to close a gap and sell off to like 0.6, I mean, that's not terrible if non-farm payroll isn't too like decisive as far as like kind of, making sure there's no more hikes. But it would look something like that. But as far as, if non-farm payroll comes out bad, like I think it's really, you want to be able to break, the bears want to actually have a pretty bad day in that case. You want to see, even before the open, you probably want to gap down like 0.5, 0.6%, and then you sell off and make a new low. Something like that. Like that would be the worst case scenario. Not even the worst case scenario. That'd be like a bear case scenario, really. But, filling the gap would be really nice, and then set yourself up for like a move on Monday or Tuesday to the upside if non-farm pay comes out the way the street wants it to come out. And we never know what they wanted to come out. So it's best to be prepared to kind of move both ways. And let's go back to Tesla. So we're at 260 now, and it seems like based off the options like we talked about, maybe that's kind of where you get pinned between 255 to 260, unless there's some type of, like I said, a catalyst that kind of moves you out. But I still think if you were to break above, you still have to worry about these levels, and they're just very simple. They're like $5 increments, and so if you break above 260, get to 270, you sell off $2.50, so you don't pay out the 270s. If you break below, I still think you want to kind of get to this trend line and kind of protect that somehow, some way. Not us, but the general market. Try to protect that, but it would look something like that. You kind of want to protect that somehow. But I mean, we've been waiting for the Cybertruck news forever, and it's getting to the point like how much of this move is pricing in Cybertruck. I mean, that's something I want you guys to think about. How much of it, how the overall outperformance, and it's not even one of the most amazing outperformances, but I mean, we can just chart it real quick and just see like how well is Tesla right now outperforming the S&P 500, and then we can continue the conversation. So we want to go. So let's say, do we want to include the gap down? I don't know. Outperform. Even. Like most time frames, Tesla's outperforming. I mean, so there you go. Tesla's generally outperforming to a considerable level the S&P 500. So good. But remember there's that slogan or saying, you buy the rumor, you sell the news. So that's the thing. if the outperformance that you're seeing on Tesla is because the market knows and everyone's anticipating the Cybertruck, and if they can just let Tesla ride and they can let it move the way it wants to move, and then whenever, if there's a pump for Cybertruck, it just sells you off, right? Right, that's to sell the news. You buy the rumor that Cybertruck's coming out soon, you sell the news. And like, what do you mean sell the news, Mark? Like, what do you mean by that? It's very simple, is that there's certain elements to the release that are going to be, perhaps deciding how, what type of numbers they can produce of these cars, these trucks, what type of price point, and how can you assume what type of margin that they're working with. Like, yeah, so let's say the Cybertruck news comes out and it comes out on a weekend or a Friday night, and the market, aftermarket, Tesla goes up like 10%. But, you have to start looking at it and be like, okay, so they came out with the pricing as well, but it looks like, I thought, with these manufacturing efficiencies that they've been working on for 4 years, that, you would see pricing come a little bit lower than what they're showing, even for the cheapest or the most expensive model. You would think that, I thought you would see a little bit more competitive of pricing, especially after, Elon Musk was saying that the Lightning, the F-150, Lightning EV, that should have been priced a little bit more affordably, and it's a little bit more expensive than what he would imagine a truck being. But if it doesn't get to the point where it's much more competitive price-wise than a Lightning, maybe that's a sell the news event, right? Or that the event is announced, but the event date is further out than you might imagine, and maybe you don't see much deliveries for end of year. Like, well, how does the market react to that? Like, retail might pump it up after hours, but when it comes to a cash hour, trade, maybe it gets completely sold off and every buy order is taken out within the opening couple minutes. We've seen that happen many times. So that's the worry I have, is because, we've been floating higher and stronger than the market. And the market is very, very weak, right? Very weak. And let's kind of look at why the weakness persists. And we can look at the long bonds, and this is the long bond. We look at it every day, but I want you to pretend this is not the long bond. I want you to pretend like you're just looking at a chart for Tesla. And let's say Tesla, and who cares about the time frame? Just pretend Tesla, Tesla had this nice run. It went up a lot of percent, and then it kind of sharply sold off after it got to some random level. And it sold off, and it, got a little bit of buying, sold off again, and it bounced pretty hard, but sold off again. And you can kind of see this pattern. Some people would say this is what a typical rounded bottom might look like. This could be a wick-off accumulation or like reaccumulation of a pattern, because even the best moves to the upside during Tesla's 10 times 10x days, there was still profit taking happening, and this doesn't look like anything but normal profit taking, right? If you were to look at this chart and you saw that, okay, so we kind of did this double bottom, right? And then we're making some highs, right? And we're breaking some highs, but we're selling off, but not making new lows. And you're not making any lows, and you're still kind of slowly creeping up. If I told you this was Tesla's chart, I think you'd buy it. And then unfortunately, this is the 30-year, right? That's not a great thing if the 30-year goes up. We don't want the 30-year going up anymore if you like equities going up, that is. Now here's the 10-year. Once again, we can pretend like, don't think this is a 10-year. Think this is Tesla. Would you buy this chart? Like, would you buy this rounded bottom? It's not as defined as the 30, but it's not necessarily making significant lows. It feels like it's just kind of slowly, just cooling off, getting a little bit of interest, but cooling off, but no one's like panic selling, just some people taking profit. That's what it looks like, right? Like, I'm not familiar with a topping pattern that looks like this, other than a topping pattern that'll look like what? So I'll draw it in a different color. You kind of want to see the bottom come out, and then you want to see what? You want to see a breakout above one of these levels, and then a failure immediately. So let's draw what that could look like. It would be like up, down, up, and then you kind of get here, and you struggle, and you peak above for 1 second, and you sell. Like, that's what you want to see, right? Like, that's what we want to see happen. And I don't know. I don't know if they can really do that unless non-farm payroll is the thing. Then after that, who knows? CPI. But then how many times do you have to keep waiting for the next economic report and the next economic report and the next economic report. Because even sometimes during the day, the intraday moves kind of suck. I mean, there was a decent move today on the index, and you could have caught that if you had like a 0-day to expiration option. You can I think I got 337% on the trade, but you have to wait for it, and I really hate that. I think it's really uninspiring, and I think, but that's the thing. Then you look at the market, you're almost getting to the point, you're looking at the action, you're like, I am totally uninterested. But that's what the market wants everyone to be. They don't want you to be defeated. The market wants you just to be like, meh, whatever happens, happens. And I'm not even watching anymore. You can have no money in the market too. You could be like, it's not inspiring. I don't want to trade anymore. Good. They're like, okay, you guys are all gone. Like, so the volume's completely gone. You guys aren't trading anymore. Everyone's sold over there. People are selling like SPX or ES futures. I mean, literally to the tens of billions of dollars a day. But anyways, so everyone's sold, right? Perfect. We're going up. And that's kind of like how it happens, right? That's kind of how it happens. You have to get to the point where it's not just like disgust with the losses. It's not like, I hate how, it seems like we're just back to 2021's pricing, quote unquote. I mean, not quote unquote, but yeah, we actually are. We actually are just sitting at 2021 pricing for a lot of tickers. Or if you're Disney, go back to 2010. I don't know. Something terrible for Disney. Or really, I mean, think about all the performers that are just doing really, really bad, that typically would be doing good in a market that's, not so growthy, right? And we're talking about like Coca-Cola, for instance, or McDonald's. They're just doing terribly. And by the way, I think that's because of the whole Wegovy thing. But anyways, I'll keep the video short and say that I don't know if yields are done yet, but I want them to be. But it really just depends on what. For the short term, non-farm payrolls tomorrow. Let's hope it goes our way. And non-farm payroll, you want the numbers to be weaker, and you want unemployment to be slightly higher. But if you get an unemployment number over like 4.1, it could be really problematic. Okay, guys. Good luck to us tomorrow. Have a good night. Bye.